Now more than ever, innovative technologies are fueling change and sparking new ways of thinking. Collaboration between corporations and startups is key to staying at the forefront of these trends. However, finding the right startups can be expensive, time-consuming, and ineffective. But Plug and Play is here to help. As a corporate partner, you will gain access to a whole ecosystem of innovation. Discover startups that meet your tech interests. Stay updated on the latest trends and network with industry peers. We will help you during every stage of your innovation journey, no matter where you are and where you want to go. Get in touch today.
Hi everyone, thank you all for joining our Innovation Day on Blockchain. I'm very happy to have you all here today, or at least to have you all connected today. During this event, we will touch base on the different applications of blockchain technology in the insurance sector. So blockchain is well known to increase transparency and lessen the need of intermediation. But how does this apply to the insurance sector, and which opportunities and risks are associated with it? We will try to answer these questions through our Fireside Chat, Trends and Insight presentations, and then the 5 startup pitches we will hear today. My name is Daria Pellini, Venture Analyst in the Ledgertech team of Plug and Play Munich, and I will be moderating today's event together with Nicolò Sapio, Partner Success Manager also at Plug and Play. Let's have a look at today's agenda. So as you can see, the event will be structured around one Fireside Chat with 2 industry experts and then 2 innovation topics. For each of those topics, we will present some innovation trends that we have seen in the market, and then we will have startup pitches. Now let's look at those startups. We are very thrilled to have 5 great startups pitching today, coming from all over the world. We can see here represented the US, UK, Switzerland, and Singapore. At the end of each of the pitches, you will have a poll to ask if you want to get connected to the startups that just presented, and then we will later collect all the answers and then make the appropriate introductions. We also have the opportunity to ask the startup questions directly at the end of each pitch, and we want this event to be as participative as possible, so please make use of the Q&A feature of Zoom to ask questions. Now, a little bit about us. So at Plug and Play, we have a very specific goal, which is to help the world progress through innovation and connection. And this is because we believe this is the best way to progress. To do so, we position ourselves as an innovation platform, which is quite a broad term because we have different activities organized around 3 main pillars. So the first one being the acceleration program. Each year, we run over 60 industry-focused acceleration programs in over 40 cities globally. We cover a total of 18 different industries that you can see on the slide now, and today's event is part of our Insured Batch 8. These programs take place all around the world. Indeed, we have a global footprint with over 57 offices, which allow us to better serve our partners both locally but also globally. For what concerns our Insured program, they are present in 5 locations in total. In the US with our Silicon Valley office, which is also our headquarters. In Europe with our Munich office, and then in Asia with Beijing, Singapore, and Tokyo. Our second pillar is the corporate innovation activity. We supercharge the innovation of over 530 industry-leading corporations by keeping them always at the forefront of industry trends. Specifically at Ledgertech in Munich, we have a total of 13 prestigious partners that you can see on the top of the slide, and for whom we provide innovation services. Our last pillar then is the venture capital activity. We invest in over 250 innovative startups per year, alongside also the world's best VCs. We have backed some of the best startups. As of today, we have a total of 28 unicorns in our portfolio of investments, and you probably recognize most of them on the slide. Finally, to sum up, Plug and Play provides a complete turnkey infrastructure for startups and corporations to collaborate and thrive together. So after this quick introduction about Plug and Play, it's now time for our Fireside Chat. We have the pleasure of having some amazing panelists today. We have Magdalena, Senior Director at Willis Tower Watson, and then we have Frank, Global Head of Open Innovation at AXA. I will now leave the floor to Eugenio Gonzalez, our partner at Plug and Play, who will moderate this super exciting panel. So Eugenio, I will leave the floor to you.
Thank you, Daria. Really happy to be here today. Hi, everyone. My name is Eugenio. I'm a partner here at Plug and Play. I'm a recovering lawyer that has spent a number of years doing M&A before joining Plug and Play, where I now lead the investment team on Insured, FinTech, and Enterprise. I'm very excited to be here today with Magda and Frank. So I'll pass the mic to Magda first to get a brief introduction on her and why did she get excited and interested in the blockchain space to begin with, and then we'll move on to Frank as well.
Thank you, Eugenio. So I have been at Willis Towers Watson for 16 years now, and at some point I had the bad idea to get involved with blockchain. It was very early on, so the first time I interacted with Bitcoin was in 2010. And then in 2014, I decided that it was a topic I should take 3 months off work to explore, and wrote an article about the impact of blockchain on the insurance industry. And it literally changed my life overnight and my job, because no one was speaking about Insurtech back then, and the interaction of Insurtech and blockchain was non-existent. So that's how I got into the space. It was I read an article about blockchain in a very different context, and I realized that instead of only transacting value and transacting, and agreeing on information, I was fascinated by the implications of consensus protocols. I realized that we could also transact risk in a decentralized way, and it became part of my job. Today, I lead our innovation efforts across EMEA, interacting with Insurtech and our blockchain proposition globally.
Amazing. Thanks, Magda. Frank?
Very impressive, Magda. Look, I'm heading the open innovation activities within AXA at international level, which means doing strategic partnership with tech companies. I've been exposed to crypto and blockchain in 2015 when I was living in China, where I did have the chance to meet with CZ from creating Binance in 2017, when I had the chance to meet with Vitalik creating Ethereum, etc. So that was super impressive for me. The energy, the space, and also all the stuff there, notably from China and Asia. I decided, aside from AXA, to create a VC serial entrepreneur fund located in Singapore called True Global Ventures, dedicated to blockchain. I've made a couple of investments through this VC fund, and notably we were one of the first investors into Sandbox. I have the perception from the beginning that blockchain has been made for insurance business. When you look at a smart contract, it's really close to what an insurance policy is, and there are a couple of initiatives that we launched within AXA. We can elaborate through this Fireside Chat.
No, that's perfect. Thank you both for your introductions. So we'll stay with Frank, and maybe because you touched upon this, let's talk a little bit about the upside. Even though the space is relatively new, where do you see blockchain technology adding the most amount of value for insurance businesses? And which portion of the value chain do you think will be impacted the most?
So depending, if we look at the value chain, and if we really look at what has been disrupted so far with the VC money, it has been really outside of blockchain. For 60% of the money invested in Insurtech has been about the distribution part. When I look at blockchain, I think this is one of the with AI, one of the most disruptive technology for the Insurtech. But I would go not for process and improvement of what we do, but like fraud detection and claims settlement and others. But I would go for creation of new products like parametric insurance, for instance. That would be something really interesting to look at. We were one of the first insurer launching a smart contract insurance policy with Fizzy, which, if you remember, in 2016
17,
or
no?
17, yeah, something like this.
Yeah.
It was when CryptoKitties was launched, and it created a kind of bottleneck on the Ethereum chain, and then we had some issue selling this flight delay insurance policy on a B2C. We did stop it, this initiative, now 2 years ago, but we learned a lot from that. Notably, it was a B2C, and it was maybe too early to make it as a B2C product. We should have done instead a B2B2C product. That is, it was sold actually in China. The coverage was already existing. Flight delay insurance solution does exist as included in other offers. So that was not a real new risk that we were covering, thanks to the technology. And we did not get enough traction, commercial traction on that. But we learned a lot, and I think, yeah, the space where it seems to be very interesting is for creation of new products covering new type of risk. And I'm a bit long in my answer before giving the mic to Magda, but we have been receiving a lot of offer from the marketplaces or from the guys trading crypto to insure crypto risk, which we didn't take so far. Maybe because we don't know exactly how to evaluate and measure this type of risk, and it's a bit early for us. But we did see the Lloyd doing so with limited coverage, which is actually cyber risk. But yeah, I think that would be very interesting to see what the market can do in DeFi on that.
Great. Magda, what do you think is the portion of the value chain that will be impacted the most?
I think that's a question that actually requires to have a time horizon. So as Frank was saying, initially we saw a lot of the exploration of insurance and blockchain on what I like to call the synchronization automation bits, right? And in certain areas, including parametric insurance, I feel that a lot of time blockchain was used as in the wrong context. If you can automate a parametric insurance product within your company, if you don't, there's no third parties involved, you actually don't need blockchain to automate that. The whole point about using blockchain for automation and synchronization is when you have multiple parties that have a conflict of interest and want to interact with each other without a third party overseeing that interaction. So I remember at the beginning when the whole industry was looking at synchronization and automation, reconciliation instead, synchronization instead of reconciliation. I remember having the slide saying all of the cases where you do not have to use blockchain, right? Because it was there was this movement about let's use blockchain to do this because we'll get funding for it, and blockchain was the wrong technology for that, like every technology that is starting. So to me, the two additional layers that have now been developing very quickly with Web3 and DeFi are far more interesting. And they have to do with new infrastructure. And when I say new infrastructure, I mean not only smart contracts, but also new and different types of data infrastructure for new types of analytics or generating new data where we didn't have data. For instance, using prediction markets or using betting platforms to generate a pricing mechanism for some risk where we don't have historical data to actually do traditional pricing. So I feel like that new infrastructure for new analytics layer that I used to put in the medium term with DeFi has been intensifying. And then on top of that, what I always thought was so cool about blockchain, it started by transacting value or agreeing on information in a decentralized way. And I thought, well, if we can do that with value, we can do that with risk, and we can tokenize risk, and then we could have autonomous risk placement. And I really like the idea of distributed and autonomous organizations mutualizing risk. So essentially, you take a very old idea of mutualizing risk, like 5 friends just pool their money, and you take all the friction of having to trust those people if you do that mutualization in that way. And you place it in a place where you can actually mutualize risk among strangers in a distributed way, and you can tokenize risk, and you can go for alternative sources of capital, and you can actually squeeze that risk to capital value chain by making it consumable risk, right? So we're very far from that, but I think that's where the long term should take us in insurance. And obviously you can't do that for all sorts of risks, but there's certain types of risk where you could certainly do that. And I think, if you look at what's going on today because of the lack of capacity in the market, like Frank mentioned, in the past years, we have seen a lot of demand to insure crypto risk, to insure smart contracts failure, to insure risks that are really related to the crypto space of blockchain, right? And there was no capacity in the market, or just a view between the London market, for instance, and what players were willing to pay for that type of risk was millions apart, right? So the response of the ecosystem to that was to develop solutions that would actually place those risks or be able to transfer those risks in distributed fashion, like what Nexus Mutual is doing and other players on the DeFi insurance space. And they're doing that for risks that could not be placed because there was no pricing mechanism. So they generated new pricing mechanisms for that. And they generated a product in a market that is not regulated, like smart contract insurance. I mean, there's lots of players providing protection that could be seen as hedging, could be seen as betting, or could be seen as insurance in a space that's not really regulated, because many of these players are not regulated as an insurer. So at the beginning, that was really difficult because we didn't have the DeFi tools to deal with the asset management side of things. But today we can, right? So you can actually have a smart contract escrowing your reserves, but actually have those reserves invested without having to go off chain. So I feel the DeFi summer during the pandemic really enabled us to look at new ways of insuring new risks that were very much futuristic before the pandemic.
No, that's great. And thank you for sharing that, because I'm thinking about adoption here. And obviously we talked about the benefits that are very clear to all of us. Magda, you mentioned two challenges in adoption, which are capacity, it's similar to what Frank mentioned, and then regulation. But maybe turning it over to Frank, with all the different applications of blockchain technology, where do insurers struggle the most when it comes to actually implementing this technology in their business?
Well, I think today what we're missing is really expertise, knowledge, and I would say, if I'm a little bit blunt, I would say the willingness in the company to really deep dive into this Web3 blockchain ecosystem and crypto ecosystem. And I think that's the fear of every corporate today, is to that they are wondering, I mean, we're wondering ourselves how to touch blockchain but not crypto. And I think it at some point this is the wrong questions, right? So knowledge, willingness to learn, and risk appetite at some point, with all this knowledge and expertise that we could get from the market today, from the experts. If we don't do it ourselves, DeFi will do it, and decentralized application will do it without us. But yeah, voila, risk appetite is quite limited on this on cyber security at first, and then on crypto cyber security as well. So need to take risk here.
That sounds very much like what we see. Magda, do you agree? Do you have any recommendations to overcome these hurdles?
I think there's like two types of hurdles because of the nature of blockchain as a technology. And first of all, I would actually say that insurance companies in general struggle with any transformation, not only transformation involving blockchain. So technology-led transformation is picking up the pace right now, but transformation is not easy across large corporates, period. In the context of blockchain, there's two issues that have generated some hurdles. The first one has to do with the fact that trying to monetize an infrastructure or a technology that is supposed to decentralize and disintermediate your activity is quite difficult. You need to find a way of adding value. So if I'm going to use the blockchain to do something that could be fully coded, what is my role there? So a lot of the development of the infrastructure that has been developed by outsiders, right, from the blockchain space, but not from the insurance space or from other industries, is about building an infrastructure that will shake the status quo in a certain way. And I feel the industry has been trying to engage with that, saying, well, how can I build, an insurance application that is on the blockchain? Well, actually, as an insurer, you can build those applications internally. The question is, why would you do that in the context of a decentralized technology or a shared ledger, distributed ledger technology like blockchain? And the answer there is, it is because of the interaction. What the technology gives you is a way of actually interacting in ecosystems, interacting in co-opetition, and things like B3I is trying to build, right? So essentially, a platform that is for insurers, by insurers, so that we can synchronize information better, et cetera. And there, the problem is another one, which is about the market going for it. It has been really difficult to gather momentum across insurance players to cooperate on that agenda of having a shared infrastructure or a shared industry utility that makes use of blockchain technology to share information or to synchronize ledgers in the way that couldn't be done before. So to me, those are two very different type of hurdles. And they're difficult to overcome by principle. The industry is used to cooperating, but not at a level of joint technology development for the industry. So it's like Swift, right? We have been saying, well, let's build the Swift. What Swift was for banks, let's build it for insurers. And then whoever builds it will monetize it later, and the rest of the industry will gather behind it, and everyone is going to use the Swift for insurance. And that has been really difficult to achieve, even with a consortium that has the largest P&C insurers and life insurers in the world together, and have devoted their best talent and a lot of money in it. And still it has been difficult to gather that momentum. And the other problem you have is, whenever you're building new infrastructure, until the infrastructure matures and you have the market shifting, you have to be bimodal. So you have to maintain two infrastructures, the one that you have on the blockchain and that interaction and those ledgers, and the one that's in your old systems, interacting with players that are not in this system. And that is costly. And the risk appetite to actually do that investment is not high, as Frank said. Many players are just waiting. It's like there is no first mover advantage, and that generates friction that's difficult to overcome.
I love that. I'm actually going to steal that quote. Okay, let's stay with you, Magda. I think we'd be remiss if we didn't address the current volatility in the market. And over the past few days, we've seen the crypto assets plummet. Given the current market, I really feel for everyone's wallets here. Given the current market volatility, a lot of people are scared and even asking themselves if this asset class is worth diving into, let alone making a bet as a company in this technology. You mentioned that having two separate architectures is probably very expensive. What would you tell people that are listening today that are fearful of diving deeper?
Okay, so to me, we're a very special industry because the insurance industry is about risks as opportunities, not only as challenges. So I have been saying for a while now that it is true that using this technology will generate new risks, but it's not only generating those risks for us, it's generating those risks for all of our clients. So we should find a way of capitalizing on those risks and insuring them. So, to me, volatility is an expression of risk. And if we are creative enough and we understand enough of what we're doing and we develop a framework to understand the risk and to price the risk, we may be able to insure that volatility, right? And to have you generate hedging instruments. So I feel there is a lot of uncertainty in the space. And if we're looking at the space and comparing it with more developed spaces, we will find higher risks. But at least as insurers, not as individuals, right? I'm not talking about Magda and her wallet and looking every day and saying, oh, geez, I should have sold 6 months ago. So I'm talking about the industry of insurance, right? There is a lot of opportunity in understanding and pricing and transferring those risks. And for instance, right now at Willis Towers Watson, we're looking into digital assets with a framework of actually understanding the value of those assets and generating the ability to capitalize on digital assets and intangibles to assess the risks and place them in a more effective way. As Frank says, if we don't do that, there will be decentralized players and new players that will look at that, because as most of the people probably in this call know, there is, I have no idea how many billion we are today because of devaluation, but there is billions of dollars that are locked into smart contracts in the DeFi space today, and less than 1% of those are insured. So even if you get 5% of that market, it makes a huge difference, right? So to me, we have to focus on the opportunities. Volatility is just an expression of a risk that cannot be hedged away and of uncertainty. And we are in the business of actually dealing with uncertainty as an asset. So why would we be afraid of that?
Excellent. Thanks, Magda. We have a number of questions from the audience and very limited time. So I'm just going to post one question over to Frank. With distributed ledger technology, can be effectively used for insurance industry when multiple parties, including insurers, intermediaries, most importantly, governments, agree upon a blockchain network or technology to improve the interoperable blockchain. Having said that, how different players which are having different technology ambitions, different technology capabilities would come together?
Well, I think there is a lot of bridge to be created and built between Web 2 and Web 1 and Web 3. And notably, I see a lot of layer 1 that are now inspired by Web 2 technology, because we just need developers, right, to build the infrastructure of the Web 3. So at some point, we will need the existing joint forces of Web 2 developers to build on the Web 3 with different mindsets. And so I start to see some layer 1 making this bridge. I think it's a matter of mindset to interconnect the two as well. And notably, when we think about the data privacy, blockchain is also the tool to make it happen for real, and notably in Europe for GDPR. So I'm still super enthusiastic about joining forces with two different age of technology, generation of technology, and I think yeah, we are here to build the distributed ledger for the next 10 years. So there is a lot to be achieved.
Great. Well, folks, we're out of time. Really appreciate it. On behalf of Plug and Play, I want to thank you, Magda and Frank, for joining us today, and to the rest of the audience. Hope you enjoy the rest of this event. Thank you so much for having us. Bye-bye.
Our pleasure. Thank you for having us.
Thank
Cheers.
you. Bye-bye.
Bye.
Thank you so much, Magdalena and Frank, for this super insightful panel, and also for sharing your perspectives, convictions around blockchain, and also its applicability to the insurance sector, but mostly for sharing your personal experience as well. Now I'm going to leave the floor to my dear colleague, Nicolas, who will start introducing the first innovation trend we will deep dive into today.
Thank you very much, Daria. And thank you especially to you, Magdalena and Frank, for the very insightful conversation. Indeed, now I'm going to dive deep into the first subtopic of the day, which is out-of-the-box solution. And when we talk about out-of-the-box solution, we really refer to general blockchain technologies that can be applied directly to the insurance business. And with that being said, I'm going to quote something that actually Magdalena said during the Fireside Chat, that digital transformation is not something which comes easily, and especially doesn't come easy for large corporates. And this, I believe, translates in some of the challenges that we are seeing currently within the insurance space. On the one hand, we're seeing low policy management digitalization, which really means that digitalization is definitely not at an all-time high within the insurance space, and there's still much that can be done. We're seeing somewhat outdated distribution methods in which in most cases the one-to-one relationship between the client and the agent is still necessary. This leads in turn to high potential for human error and a very high risk for fraudulent claims. So in all of this, how does blockchain come in? So blockchain to some extent is very renowned for its ability to improve efficiency, to improve security, that's probably one of the most relevant things, and overall, as a result, improve also the customer satisfaction. Now, I would like to dive a little bit deeper into how insurance companies are actually applying blockchain and how they can apply blockchain to their advantage. On the one hand, we're seeing solutions such as event trigger smart contracts. And I like the fact that during the panel, you discussed quite a bit about the parametric insurance and parametric solution, which is probably one of the main applications in this specific case. Second of all, we have enhanced operational efficiency, and that goes directly in relation to the main characteristics of blockchain technology, which also translates into improvements within claim management, especially for the fact that blockchain is immutable and everything can be traced. This has also a very big impact into what concerns fraud detection. And fraud detection to us is probably one of the most relevant topics of today. And this is also why we have an entirely dedicated subsection directly after this one. Then, of course, blockchain opens the opportunities for new insurance services. And where here we will introduce especially DeFi insurance, which we intend as insurance on decentralized assets, as well as decentralized insurance itself in the form of peer-to-peer insurance. And then finally, services beyond insurance. Therefore, all these services that can be directly offered by insurance service as a B2B service and that basically surround the overall ecosystem. So what all of this translates into, it's a bunch of really concrete opportunities that we are seeing in the insurance space, going from the highest maturity opportunity to the lowest maturity, but still very relevant. We're seeing, as I already mentioned, parametric insurance, which basically consists in event-based insurance, which is directly automated by smart contracts. Then we're seeing the creation of ready-to-go insurance frameworks, which are especially useful for claims, payments, data management, and everything that surrounds the insurance space as a whole. And then on the lowest maturity side, but still extremely relevant as we discussed, is DeFi insurance, which we describe as insurance which is dedicated to the protection of your decentralized assets, and then decentralized insurance. So basically the allocation of risk in between a group of individuals through the use of blockchain. Now, this was a very brief introduction, and I believe this should be all from me. And instead, I would like to introduce the startups of the day that are really applying this technology in the insurance space. Today pitching, we have Ensuro, Ledgertech, and Breach. And without further ado, I would like to introduce to you Marco Mirabella, who's founder and CEO of Ensuro, a decentralized capital provider for insurance companies. Hi, Marco, can you hear us?
Thank you for the introduction. I'm excited to be here.
Let me just remove the screen share so you can get it yourself and present your deck. Just a second.
Thank you.
Perfect. The floor is yours.
All right. So Ensuro is a decentralized capital provider for insurance risk. We are fully licensed, first decentralized, and the first insurance on the blockchain. We want to use smart contracts in order to create a competitive insurance portfolio, and our mission is to allow everyone to access to the insurance market. If you look at the insurance value chain, we're seeing that recently there's been a lot of transformation. We're seeing Insured companies and tech giants coming into the space. We're seeing new capital coming into the space as traditional and alternative capital, and the role of NGA is expanding from pure distribution to trying to tap into the. Hello?
Sorry to interrupt you. We are having some issues with your audio. I don't know if it's the headphones or it's a bit, there's a bit of noise. It's kind of hard to understand. Sorry about that.
Can you hear me now?
Can you try and speak? Sorry.
Hello, can you hear me now?
Yes, it's a bit better.
Okay, perfect.
Thank you.
So yeah, apologies for that. Yeah, so we are the first decentralized and fully licensed insurance on a public blockchain. We're using smart contracts in order to create a competitive insurance portfolio, and our mission is to allow everyone to access to insurance risk as an investment. If you look at the insurance value chain, we're seeing a lot of transformation in the recent years. We're seeing Ledgertech companies and tech giants coming into the space. Capital, both traditional and alternative capital, trying to jump in. And the role of MGAs is expanding from pure distribution to tapping into capital as well, like creating the insurance companies. If we focus on the MGA's role and their relationship with the insurance companies, we see that traditional companies are mainly slow and inflexible in response to capital requests from MGAs, especially when dealing with innovative products. Due to the high operational costs, traditional insurance put barriers in terms of the product that they can provide capacity to. So what's happening is that they tend to focus on products with high premiums and sometimes with low volume. And finally, what we're seeing is that traditional insurance companies are requiring to these new insurtech players track record of performance or historical claims data. And this is impossible to have for them, because with a new product, with a new player, you cannot have it in the market if you don't have insurance capacity. So it's the chicken and egg problem. On the other side, Magdalena and Frank kind of touch into this. We're seeing a new capital source coming in, getting created. So $150 billion in stable coin supply, 4 million users interacting with the DeFi, and actually $68 billion. I just checked the number of DeFi pools in terms of total value locked in the DeFi protocols. So a new capital that is trying to enter in space and is looking for yield. So what Ensuro is doing is essentially bridges these two worlds. It bridges the need for alternative capital coming from the MGAs and innovative capital seen in DeFi. The way that works is that Ensuro collects capital under the form of USDC, so a stable coin, from different liquidity providers, both retail and institutional investors. This capital gets deployed inside a liquidity pool that sits on top of the Polygon blockchain, so a permissionless blockchain. And finally, this capital is then used to provide underwriting capacity to MGAs and risk model providers operating off-chain. They sell up policies to their final customers, receive a premium either in fiat or in crypto, convert this to USDC and send it to the Ensuro liquidity pool. That essentially locks a certain portion of the capital automatically in order to guarantee solvency of the overall portfolio. Now, since we are based on top of a permissionless blockchain and we use USDC as a currency, we can then tap into the DeFi space as an asset management component. So the float that we collect from the different liquidity providers is reinvested into Aave, generating a yield that is higher than traditional products that an insurance can tap into, and you have liquidity for this. So we can jump in and out of the protocol. It's safe because the loans are on average over-collateralized and generally more efficient. So these allow us on one side to be more competitive on insurance capacity that we provide to the MGAs, and on the other side, provides additional interest rate to the liquidity providers that they will get exposure to the insurance risk on top of the other returns. The way that we make money is essentially out of the full premium that we collect from the policyholders. The MGA takes a cut, so the seeding commission, and finally we take a share out of this net premium, which is generally 3% shares. The remaining is to cover the expected losses, and finally the cost of capital. So the liquidity providers that lock their capital get a certain interest rate that is transferred directly to them. We are a licensed insurance, so we obtain a license as an insurance general business and a digital asset business class T from the Bermuda Regulatory Authority. And these two licenses allow us to be a reinsurance company and an insurance company that use cryptocurrency as a solvency capital. Initially, we're using USDC, but the licenses allow us also to use additional crypto, such as wrapped Ethereum or wrapped Bitcoin or other currencies. We are live. So the first product that we launched, it's in partnership with a company, a French MGA called Koala.
and the product is a cancellation for any reason in the travel industry. A user can purchase a ticket and then cancel the flight for any reason and get entitled to 80% of the cost of the flight. It's sold as a B2B2C product or a B2B product, and it's distributed throughout the major European search engines. The product can be, and the performance of the products are public, so you can jump into the dashboard.ensuro.co and see the performance. And we are able, through the use of smart contracts, to have real-time visibility of the performance of the portfolio in terms of default percentage, in terms of active premiums, in terms of premium collected. And we're able to make corrective measures if we see that the loss ratio of our partner is going south. In terms of the team, I'm Marco Mirabella. I'm before Ensuro, I was one of the founders of a layer 2 solution called Cartesi, and also worked as a chief strategic officer in one of the biggest price comparison websites in Southeast Asia. Guillermo is our CTO, has over 25 years of experience in software development, and he was the CEO of 2 startups. One is RadioCut, which is a platform for listening to radio on demand, and the other one is Fiero, the biggest ERP libraries in Argentina. Luca is our mathematician, a PhD in mathematics from the University of Oxford, with experience in Boston Consulting Group and a data scientist. Giacomo is our chief risk officer, and he was a quant in IBM. And finally, Colin is our reinsurance expert. He was the CFO for Markel Latin America and has over 30 years of experience in the reinsurance market, being based also in Bermuda. So, thank you, and I'm looking forward to answer any question you might have.
Thank you so much, Marco, for this great pitch. We have a couple of questions from the audience. The first one is actually super interesting, and it says, what are the main risks associated with reinvesting the insurance premiums through DeFi platforms such as Aave and Compound?
So Aave and Compound are, the risk of Aave and Compound is actually low because they use over-collateralization of the asset. So what I need, like the way that Aave is used is essentially I need to deposit 150 up to 175% of asset, let's say Bitcoin or Ethereum, in order to take a loan from the platform of 100 USDC. And also they have several different mechanisms in order to prevent fluctuation of the markets. So they have a liquidation mechanism that sells the asset at a lower cost. So bot can actually access and purchase the crypto at a lower price. And also they have a mechanism to prevent back run. So Aave has sustained a market collapse of 40 to 50% in a single day. So, and has been audited by 7 or 8 different companies.
Thank you. Thank you for the answer. We have another question. Any ideas on B2C business, or is it too complex?
So B2C business?
Yeah.
Yeah, so we're seeing that this type of architecture that we created fits well with products like weather insurance that can be directly sold into the hands of consumers. And we've been also discussing with players to create a earthquake insurance that, differently from the traditional ILS markets where the risk is very, very high, can be sold directly to the final consumers. And we're seeing a good trend in South America. So in South America, we're seeing a shift from people moving from fiat directly to crypto. And when this trend happens, you essentially have a distribution mechanism directly to the wallet of the users. So you can provide financial services directly to them.
Thank you so much, Marco. I see that there is another question, but unfortunately, due to time, we cannot answer to that. But please, now you should have received a poll on your screen. So if you would like to ask Marco something more to get connected and to be introduced, feel free to select yes on the poll, and then we will connect you with Marco after the event. Thank you so much for being with us. So, time to move to the next pitch. I would now like to introduce you to Eran, the founder and CEO of Ledgertech, which is a blockchain-based product to digitalize claims and underwriting in insurance. So, Eran, are you here with us?
Yes, hi, good afternoon. Let me share my screen and walk you through the Ledgertech presentation. We're a digital insurance technology company. We developed a low-code InsureTech platform for what we call MGA as a service. which basically helps different participants to define insurance products based on blockchain. I founded the company together with Omer and my former team from EasySource, our previous startup that was acquired by IBM in 2016, where we help large enterprise customers, primarily in the insurance and banking industries, to better understand their core business applications. This is how we ended up in insurance, when we realized that on one hand, the traditional insurance companies are too big, too slow, and too complex to be efficient as digital players, simply because of their traditional mainframe-based policy admin systems on one hand, and on the other hand, we see a lot of the digital players spending tons of money on customer acquisition costs on one hand, and ignoring agents and brokers as a distribution channel, even though it is responsible for about 70% of the GWP that is being sold. So in order to solve this problem, we've developed the Ledgertech blockchain-based Insured platform, which basically allows our customers to define new innovative insurance products. So start with the policy definition, pricing, coverages, conditions, deductibles, liabilities, etc., using our configuration studio. The final deployment is on cloud and Amazon Web Services. As a part of this process, we also enable the different business processes like underwriting, claims management, etc. And the result is a white label user interface. It is native Android or iPhone or web-based, where you can actually define and sell insurance products digitally. This is done through a network of brokers, which are participant on the solution, which is one of the reasons the blockchain infrastructure is important. We provide them with tools to become digital brokers. So basically, they can take their biggest assets, which is customers, and transform them into digital channels. Makes a lot of sense if you look at what happened to the travel industry 10, 15 years ago and where it is today. And you can see where the insurance brokers and agents industry is going to. So we provide them with agency management system, or we can integrate with existing ones. And we basically create a marketplace where different participants can interact using the blockchain platform. So we have brokers, we have the MGAs who are creating, defining new insurance products. We have technology and data. And of our platforms. So basically, every insurance product that is created on the Ledgertech platform, one would use different insurtech providers. So if it's a motor insurance, you'll probably use a telematic solution provider in order to come up with something more interesting. If it's cyber insurance, there are 10 or 15 players that would analyze the risk of a certain small or medium enterprise in terms of vulnerability assessment or threat analysis. If you're doing home insurance, there are data providers that would analyze the property for flood risk or fire risk or leakage and so on and so on. So we provide access to these players as part of our marketplace, and we provide, of course, billing and finance solutions. So when you create a new insurtech platform, you don't have to deal with the integration or with the payment or business agreements. And of course, we have insurers that provide fronting for the MGAs, and we have reinsurers that provides capacity. So basically, once you're creating a new insurance product, you have everything you need, both from a business perspective and from a technology perspective, so you can focus on the actual distribution of the insurance product. I'm not going to bother you with the detailed technology structure of our product, but I'll be happy to chat to whoever is interested later. And the reason we're doing it on blockchain is because of the advantages of the blockchain infrastructure. So basically, we view blockchain as a plumbing, as a middleware. But in order to conduct our business well and create this marketplace, we need to have an increased security, we need to have transparency, we need to have mutability, and we need to have provenance. And we've built it on the R3 Corda enterprise platform, which is the de facto standard, I think, of the banking and insurance industry. B3I are using it for reinsurers. A lot of the banks are using it for blockchain-based banking. So it made a lot of sense for us to do it. And the type of products that are created on the Ledgertech platform, as I said before, always have a technological edge on one hand, and trying to create an end-to-end digital journey or customer journey, which is easy to use, relatively quick, and friendly. So that's it in a nutshell. Happy to take questions.
Thank you very much, Aaron, for the presentation. It's very nice to have you here today. And yes, indeed, we do have questions from the audience. So I believe you touched upon this specific portion, but would you describe, so is Ledgertech as software as a service-based application?
Yes.
Perfect. And so the second question is, how long does the integration of your system, so I believe basically within the any insurance business, take on average?
It would take, well, it's supposed to take between hours and days, but I would say in reality, to create a new insurance product from scratch would take 2 to 6 weeks, with handling the not just the technological aspects, but also getting the capacity, getting the fronting. We work with a lot of MGA incubators that provides, let's say, the regulatory requirements for whoever wants to set up an MGA. We work with insurers who would like to come up with a new type of digital insurance product and find it too difficult and too slow to have their IT do the integration. So we're just launching in August, for example, in Latin America, telematic-based motor insurance that is being sold as embedded insurance. So car manufacturers going to sell new cars with insurance included based on this platform. It takes them less than 8 weeks to build it. So.
Perfect. Well, Aaron, thank you very much again. To the audience, you should put a poll on the screen. If you wish to get in touch with Aaron directly or Ledgertech team, please just click on yes, and we'll make the appropriate introduction after the event. Now, I would like to introduce the last startup for this section, Breach, which is working on cyber theft, insurance, and risk management solution for the digital asset industry. Ihab, are you on the line? Yes, I actually see the screen. Perfect. Hi.
How's it going, everyone? Can everyone see my screen?
Perfect. Yes.
Great. Okay. Thanks. Thanks again for the invite to present. Awesome panel. Before that, really appreciate what Magda and Frank shared earlier. I at a lot of times I wanted to jump out into the screen and comment as well, but no, thank you all again. For just to kick it off, did want to state that we are of the presenters. Breach is not a blockchain based insurance company. We're structured as a traditional cloud-hosted technology, but with the premise of exclusively insuring crypto risks. I think a lot of the folks that are listening here have a unique appreciation for what crypto is today and where it came from. As a quick way of background, I spent post-business school in the insurance industry, spent 7 years at Liberty Mutual, helping them, build new products, enter new markets. Left Liberty in April 2019 to found Breach. At that time, market cap was, 150 billion, sub 100 billion, depending on the day. which is now actually because of the market where it is right now, it's closer to 1.5 trillion in total market cap. It's still pretty substantial. But what you see on this slide speaks to how underserved the industry is in terms of insurance capacity, insurance solutions, particularly as it relates to the type of risks that exist today. 60 billion in crypto stolen or inaccessible at exchanges and custodians, 100 billion that have been lost or inaccessible at an individual wallets, over $2 billion in smart contract, actually DeFi protocol hacks and exploits, and then a growing, number of risks in both corporate crypto risks, startups, mid-market, and very large companies that need cyber crime, D&O and E&O, and then obviously whatever is becoming of the NFT space and the metaverse. That's really, this is really the domain that we're looking to create truly regulated, traditionally reinsurance-backed insurance solutions. And, really the first product that we've created focuses on the bottom. We believe that there's a user experience problem in crypto where, you on-ramp in one place where you buy crypto, Bitcoin, ETH, some kind of stable coin, and then you use that and then you transfer it to a DeFi protocol or individual wallet and earn yield there. The premise around our product is it is a CeFi insurance solution. It's our first one. We wanted to go for a low-hanging fruit. It's called Crypto Shield, and it protects users of popular crypto exchanges. Our value proposition is on-ramp at the exchange, leave your crypto there, earn your yield there, staking it with Gemini dollar or USDC or whatnot, and avoid the gas fees. And instead, the heartburn that people continue to get based on various crypto exchange hacks and social engineering events, the HubSpot hack that happened, there was a downstream impact to crypto as well. That could have led to social engineering events where users of those exchanges could have been asked to transfer their assets, rendering them inaccessible to unknown wallets. So our product ensures hacks of hot wallets of exchanges, cold storage thefts, and then these social engineering events that could expose individual users of exchanges. We've created a policy that is able to be issued on a guaranteed issue basis. So underwriting and onboarding and actual quoting is really simple. You get asked 4 questions. It's, what state do you live in? Our product is only available in the US so far. What state do you live in? What exchange do you use? How much crypto do you have? And how much of it do you want to insure? That's really it. And you're able to get insurance in under a minute. Really excited about it. The complex part about anything related to crypto is that there is a lot of education that's required. And what Frank said to me or said to the group earlier really resonated with me in the commercialization of crypto. I think it's really important to note that so much education is required. So where these kind of products do really well is B2B2C. B2C is really, really tough. So what we're really doing is focusing our efforts on growth marketing partnerships with exchanges and crypto lenders and crypto custodians, and embedding our product into the user experience of their product offerings or into the user experience of their actual platforms, and in a certain degree also partnering with them on lead generation. That's on the crypto focus side. On the distribution partnership side, we're onboarding a number of regional as well as national brokers to distribute our product. It's a really efficient way to distribute, and I think it allows them to respond to a lot of the crypto needs that they've been getting. So really excited. There's gonna be some really cool announcements that we'll be making for some national brokers that are going to be selling our product, distributing our product in partnership with us. So excited there. I think opportunity is still to really figure out who the client is. I think there's a lot of assumptions that people have that, the high net worth individual may be the right candidate for a product like this. It may be the person just getting into crypto that only has 5 or 10 grand in crypto. So it's going to be really fun to see where the traction is within this distribution channel, but where we are really excited about that. What we've built is, I think, a really important infrastructure. It is not, smart contract based or blockchain based, but it is a really efficient infrastructure that I think that one of the questions that got asked earlier is, like, what is the value proposition of building something like this? Is I think where startups do really well is become really efficient in processes and don't have the legacy resources or technology issues that larger organizations have, like my former employer and some of the carriers that we work with, and be able to build really efficient processes and technology from the ground up. And you look at companies like Uniswap with they have like 12 or 20 employees. Even Nexus Mutual, the amount of stuff that they're able to accomplish today, it's with like less than 50 people. It's unbelievable. Whereas traditional insurance would have an organization of 500 to 1,000 people supporting that size of a business, maybe more. So really excited to be able to build from the ground up. I think it's a massive advantage for startups. And we're structured today as an MGA. We're licensed in almost 40 states now. Our product is almost countrywide. It will be countrywide by the end of this quarter. But we've also been we're also structured as a Bermuda insurer. The next set of products that I think the world will see us launch, towards the end of this quarter and really be busy with in the second half of this year, is us as the primary insurer, and working with traditional reinsurers as well as alternative capital. So really excited about that. But we've built all the infrastructure from obviously the licensing, but the entire platform from quoting all the way to bind, to claims administration, to integrating with exchanges and lenders and custodians, and having AML, KYC, anti-fraud practices in place, all the reporting and analytics requirements, being able to process payments and billing. Really, important infrastructure that we spent time in building the right way. But we're excited about the scalability of it. Really touching on the team. I'm one of our co-founders and CEO. Now I've been in insurance for 10 years now, regulated insurance for 10 years now. Ian Fraser, my co-founder and CTO, really impressive background of 20 years in banking, investment banking, and then 5 years in crypto. Luis Santiago, a head of growth, spent time as a broker at Marsh, spent time with me at Liberty Mutual post business school, and then was a VC most recently prior to joining Breach. TJ Alanalua, spent time as a broker at NFP, and then joined me on my team at Liberty Mutual. Was lucky enough to be able to convince him to come over to Breach as our head of ops. Jim Flynn, some of you in the PNP world might recognize him and his name, but he joined me from American National Insurance, a $30 billion multi-line carrier. He was their enterprise chief risk officer and chief actuary, and that was their reinsurance buyer. He came over as our head of risk and chief actuary. Met him through carrier discussions as I graduated through Plug and Play, and he and I just really hit it off. And he became an ally of mine within discussions with American National, and was almost finishing my words, and is a crypto holder himself, so has a unique appreciation for what we're building, and just excited to take that journey with this crew. But I don't know if I have time, but happy to answer any questions if you guys have any.
Thank you so much, Hihab. Super insightful also your presentation. We have a question, and the question is, do premiums change based on asset prices fluctuations?
It's a wonderful question. I think it's something that insurers have really struggled with, and I think we have tackled in a really, I think, sensible way. What we've done is kind of created a policy that establishes a policy limit similar to a homeowner's policy. You have a replacement cost. Over the course of the last year, lumber has doubled, tripled, I don't know what it's done, copper, same thing. Just because of that dynamic, it doesn't mean that you have a higher replacement value for your home. You still have that established replacement cost, replacement value for your homeowner's policy. If you wanted more because of these dynamics, you would have to actually go back to your home insurer and ask for a higher limit. Similarly with us, if you have $38,000 worth of Bitcoin and you have a $40,000 policy, cost of the replacement of that Bitcoin goes to $50,000 or $60,000, you would need to come back. And we have triggers within our platform to notify you that the value of your crypto has gone up, and you would increase your policy limit. but know the value of your crypto policy does not fluctuate. It stays consistent. I think that's what has been able to get us the confidence of working with reinsurers to back our product. But hopefully that answers the question.
Yeah, thank you so much. It was a super precise answer. So thank you again, EHAB, for being with us today. To the audience, once again, you should have received a poll on the screen to ask whether you would like to get connected to EHAB. If you have any other questions, I see that another question is popping up on the screen, but unfortunately we don't have time, but just select that you would like to be connected with EHAB, and then we will make introductions afterwards. So now it's time to move to the second macro trend we will deep dive into today. We are talking about blockchain applications to fraud detection and security. So first of all, what do we mean with insurance fraud? Frauds in the insurance sector cover the range of activities that an individual may commit to achieve a favorable outcome from the insurance company, and attempts to illegally re-up funds from the insurer can take a variety of different forms, from, for example, staging the incident to misrepresenting the situation, including the relevant actors and also the cause of the incident, and then to finally misrepresenting the extent of damage caused. This practice, of course, causes a lot of challenges for the insurance industry. And first of all, insurance fraud costs at least 80 billion every year. And this is because fraud is more common than we could expect, as it's presented in 18% of insurance claims. And at the same time, we have seen a worsening of frauds in the last years, as 30% of insurance said they increased the rate of fraud during COVID-19 pandemic. For most insurance companies, namely the 87%, fraud risk is translated into also an inability to innovate, leading to decrease in the product offering. As we can grasp from all of these numbers, frauds in insurance sectors represent a super big challenge, but at the same time, it's not sufficiently addressed, as only 10% of insurance use algorithms and also other anti-fraud measures to flag these suspicious claims. So how can technologies be leveraged to address these challenges? Of course, we don't only have blockchain technologies, but we have a variety of different technologies. So let's just quickly go through them. Insurers can use machine learning and behavior analytics models to identify similarities between previous fraudulent actions. Also, on the other side, they can use chatbots to speed up claims processing. Indeed, chatbots direct customers to take photos and videos of the damage, and this gives potential fraudsters less time to change data. Similarly, computer vision supports insurers, as computer vision models can infer meanings from visual inputs, such as also here images and videos, resulting then in faster assessing of the loss and less probability of fraud. Through IoT solutions, insurers can be alerted of a claim instantaneously, and this gives fraudsters little time to manipulate data in their favor. And in addition, insurers can have more information on location, time, or, for example, average speed of a car accident. Last but not least, insurance companies can leverage on blockchain technologies to decrease the probability of fraud. And in the next slide here, we will see 3 opportunities, and namely 3 use cases in the insurance industry, and we see how blockchain can help. So firstly, insurance providers experience many issues while collecting data simply because of the unwillingness of customers to reveal sensitive answers to the insurance agents themselves. And blockchain can guarantee protection and greater control over personal data. Then on the other hand, claim management between different insurance companies is often inefficient. So just imagine, for example, that you are involved in a car accident and it was the other driver's fault. So you naturally submit a claim to your insurance company to recover the loss. And this request puts your insurance company to start with investigating the claim. However, on the other side, the other insurer would have also its own claim processes, which can be different. And this leads to duplicated work, to delays and human error. Blockchain solution here can help because they make claim processes 3 times faster and 5 times cheaper, thus also decreasing the likelihood of fraud. Lastly, sometimes data are also difficult to reuse because of different and non-comparable data sources. And a solution here is represented by smart contracts on a blockchain that automatically execute programmed claims processing actions, which can then automate information transfers between different insurers or between insurers and other parties. Now, we have our last two pitches for today. So without further ado, I will leave the floor to Quantstamp, which is a blockchain security and insurance company holding a patent for the insurance of digital asset, as well as a patent for evaluating the risk of blockchain application. We have the pleasure of having with us Sebastian, Quantstamp's country managing director. So Sebastian, I see you here. I will leave the floor to you.
Hi, thank you. So I'm going to present something which is a bit surprising, and it's actually connected to the previous session. So Quantstamp is one of the global leaders of blockchain security and smart contract security. And what we've done over the years is that we've actually started our own insurance company for cyber insurance for non-custodial smart contracts. So what we did there is that we established a primary insurer in Bermuda, and we are now able to offer insurance for decentralized finance. So something which was discussed in the Fireside Chat and also in the previous session. So as opposed to Breach, who offers insurance for custodial solutions like exchanges or wallets, we focus on non-custodial smart contracts. So these kind of DeFi platforms which implement core finance systems such as lending or decentralized exchanges on blockchain technology. I have a different chart from what Marco had in his presentation. I checked DeFi Llama, and the total amount, total value locked in DeFi across all the different chains was somewhere around 200 just about a week ago. Now it's more like 160 billion, but I'm really convinced that this is going to grow back. So in order to be able to ensure this kind of these kind of platforms, you need to be able to understand both the financial and the technical risks. So you need like economic expertise and also like expertise in order to successfully identify, quantify, and mitigate these risks. And what we did was that we were like, as Quantstamp, we were talking to a lot of insurers also through plug and play in the past years, right? Even before the pandemic, I was going regularly to the insurance events here in Munich, and was trying to convince insurers that they should take this opportunity and we should do like DeFi insurance because it's going to be a growing business. At the time, I think the total value locked in DeFi was less than 1 billion. But like Frank said in the Fireside Chat, like insurance companies, they don't have maybe the internal expertise to assess that risk, to underwrite that risk. So after talking to dozens and dozens of insurers, we decided, okay, we need to start our own company. So we joined forces with a global leading insurer who is one of our main investors. And we also joined forces with a global reinsurer who is providing reinsurance for our DeFi cyber insurance policy. And together we're launching Chainproof, which is going to be announced later this month. We have been conditionally accepted in the Bermuda Monetary Authority sandbox as of February this year, and we're expecting the license to be issued literally this week. We are one of the first regulated non-custodial smart contract cyber insurance providers. We've already have more than 200 customers in our own pipeline at Quantstamp, which many of them are ready to buy over 200 million worth of coverage. And for the next 2 years, we're expecting projections to go somewhere around 2 billion. And we already have production-ready insurance policies, which we've developed together with our insurance and reinsurance partners and their legal departments for top DeFi platforms. And we're also working on NFT policies. Our team consists of like, this is like the founding team. Our team is extended. It includes also insurance professionals from our insurance and reinsurance partners, but our current team is made out of myself. I'm the CEO. I have a strong background in risk assessment. I've been an auditor in this space for over 4 years now. My CTO, Joseph, he's a professor at Carnegie Mellon University, and he's an actuary by training. Krishna, he's one of the managing directors at Quantstamp, and he's the business officer at Chainproof. Don, he's another managing director at Quantstamp and also the chief investment officer at Chainproof. And Richard, who is the CEO of Quantstamp and the chairman and president of Chainproof. So that's pretty much it. The pitch is really short. I wanted to open up the floor for questions if there are any.
Absolutely, that's perfect, Sebastian. Thank you very much for your presentation. So indeed, we do have one question from the audience. If you have any successful use case within your customers that you can share with us. So some example of a specific use case that you have.
I'm not sure what you mean by use case. Is that like a DeFi platform or is that something else?
I believe example of successful collaborations that you have done in the space. If I interpret the question. If not, I do have, I would say, a more direct question. So you mentioned also that you would be providing insurance on NFTs. So how do you imagine how would that work basically in your perspective? So entirely based on the value of the NFT itself, limited to a certain amount of collections. What's your perspective there?
So it's very similar to the type of strategy that Breach mentioned. Like you have a policy limit, right? And if the value of the NFT itself goes over, you should increase your limit. So I'm really confused about the previous question. Sorry about the partnerships. So we are the primary insurer, and we are insuring customers, like we're like a B2B2C. So we're insuring basically people who deposit funds into DeFi projects. Those are our customers. Partnerships are basically like the successful partnerships that we have with our insurer and reinsurers. And we also have like a large set of investors in the DeFi space. This is going to be announced in the next couple of weeks. So yeah, stay tuned.
Perfect, Sebastian. Thank you very much again for the presentation. So I will now move and would like to leave the stage to the next and last startup for today, Togggle, who is basically building a decentralized bank of data where people have more control over the digital identity. Michelangelo, I leave the floor to you.
Hello, everyone. You can see the screen now?
Yes, we can.
Okay. Hello, everyone. My name is Michelangelo, and I'm the CEO founder of Togggle. We're building a decentralized bank for data. With me in this startup, I have my CTO, that is Chandan. He had the previous experience on building things in a different startup, and he was in Forbes top 4 AI startup too. And on my side, I have previous experience on a company. I got exit on the pasta one. I'm Italian, yeah, on the pasta one. And I teach NFT and decentralized identity in a blockchain in Rome. So one day I was pitching our B2C proposition that was giving back control over people data in a really large event. And two companies came to me after the presentation, and they start asking me if we can decentralize information. They were an insurance company that wanted to have decentralized information from their customers. So after 1 week of research during the event, I've interviewed hundreds of companies. We define some common problem that everyone were facing. So the first one was the data are stored somewhere in the company, and you need to have the compliance cost, security cost, and so on. And even for the people that need to do KYC, the time to onboard a new customer is really long, and sometimes the failure are really high. And even the bounce rate during the KYC system is high, because if you are a known company and you ask personal information like a passport, so really sensitive information, some people just don't feel like submit those information, and they just move over. So what we decided to build, we started to build a decentralized product. Is a decentralized KYC. The KYC, you all know, but I repeat for the ones maybe don't know, is when you just take a photo of yourself, your ID card, liveness check, photo of your ID card, and you fill the information about yourself. Those information are verified and stored in a third party. And in that moment, they can link your wallet, your account, or whatever else to your physical person. What we decided to do, to store those information in a decentralized way. So we put those information, we encrypt the information with blockchains with the private key of the user, and we store it in a decentralized storage. In that way, when you do the KYC, you just need to do once. You can access up to different companies at the same time without doing KYC again. For example, now if I want to use Binance, I go to Binance, I do my KYC, then I move to Coinbase, I need to do the KYC again. And it's a waste of time and a waste of efforts for the user, and it's a cost for the companies. So the solution is reusable credential. So you do the KYC once, and then you can use that. And not the decentralization of information, because if we get a data breach, we just get breached with maybe one person, not the entire honeypot that we can create with people. So this is more effective as a solution. About the competition, the two key factors that are different from other companies is the reusable credential, that only few companies are moving to reusable credential, a fully decentralized solution with the storage too. For example, not even as Togggle, without an authorization, as explicit authorization from the user can access those information. And even self-compliance, because no one has access without asking the permission. And even on the self-compliance, the company can read the information if needed, like the KYC stuff. And for an authority point of view, even the authority can go through all the process thanks to the blockchain, to the process and get to the user information. So we use a pay-per-use model. Like all the other KYC solution, it's cheaper than the competitor because we use a reusable credential. So once we onboard a customer, we don't need to do again that process. This is some traction that we got from the consumer point of view when we were targeting the user to show you that people care about decentralization of information. And on the other side is the company that we were able to onboard in less than 3 weeks. These are some partners that we have. You can see Plug and Play as investor, and then we have Oasis Foundation and other partner all around the world. So thank you for the attention, and let me know if you have any question.
Thank you so much, Michelangelo. We have a question coming on the chat, which is about what is your average user onboarding?
What is average user onboarding as time, as a type of user?
I think in terms of time, I guess.
Okay. For example, we got one company last week and took us less than 3 minutes per check. Was not even fully automated at that time. Now to check one person is less than 1 minute.
Okay. Thank you so much. That's it from the question side. So also here you have a poll, just if you would like to get connected with Michelangelo from Toggle. And Michelangelo, thank you so much for being with us. I believe your pitch perfectly concludes our startup pitches for the day. And I will now pass the microphone over to Nicola one last time to conclude our event.
Indeed, thank you very much again, Daria. Thank you to all of you that have participated at the event, and thank you for the startup pitches and especially the initial presentation. So indeed, we have come to the conclusion of our event. We really hope that you enjoyed the startup pitches. We really hope that you enjoyed our Fireside Chat. And of course, we're looking forward to proceeding with the introductions with the startups for all of you that have expressed the interest through the polls. So now, before concluding the event, we would like to talk about some of our upcoming events, so especially the events that we as Plug and Play are going to host over the next few weeks. So the first one will be on the 31st of May and will be another innovation day, in this case on the topic of sustainability within the insurance sector. So you can expect the same short and sweet format as today for the event itself. And the event will be hosted together with our Singapore office. And the idea is to really give a perspective of what sustainability in the insurance sector means, and especially giving this perspective both from the European market and from the APAC market. So in this case, we will have a total of 8 startup pitching, 4 from EMEA and 4 from APAC. And the second event instead is the Ledgertech Europe Expo. So we're particularly excited about this event because we're trying to use a different format. So in this case, this time we're doing things a bit differently, and we're going to host a pop-up expo directly in Amsterdam on the 28th of June. So what can you expect from the event? From the event, you can expect the conclusion of our batch 8. So definitely the pitches from our batch 8 startups, 12 of them. And second of all, especially the participation of speakers and in general experts of the sector from all over Europe. As a second thing, of course, these spots are limited. So please, if you wish to participate to the event, you can follow the QR code that you find on the top right corner. And there you will find the direct link to the event for your registration. So once you've registered, we will review your application. And then a member of our team will reach out to you directly via email with a ticket as a confirmation. So that is it on our side. I hope to see you all again. Thank you very much. And we'll leave you with a QR code directly to our LinkedIn page in case you want to get in contact. Thank you very much. Bye-bye.
Thank you. Bye-bye.